Hey, what is going on YouTube? This is Tom here with another episode of Market Cap Investing. We're taking you through fractional shares, $5 a week, try and show the power of long-term compounding growth. Taking a look at our portfolio here, got a lot of good winners, a lot up 30% or more. We're less than a year into this. We hit our 1 year anniversary here in a few weeks, and I'll do a bigger rundown at that point in time. And then a few losers here at the bottom that I still have a lot of confidence in that actually I would buy more. I am buying more, CRISPR and Zillow and Grow Generation, just not today. But today I want to introduce you to a new stock. It's not really a new company. I'm sure it's one you've heard of. I'm sure it's one that you use probably on a regular basis, but this is Twitter. This is not one we have in our portfolio at this point in time. But Twitter is such a small market cap compared to Facebook and other, even Snap, which is almost as large as it now. So we're going to buy $5 worth of Twitter. I'm going to jump over and show you where Twitter sits from a market cap perspective. I'm going to do that on the spreadsheet actually. So here we go. We bought $5 worth of Twitter. Now I'm going to jump over to the spreadsheet and we're going to talk about performance. So we're about 7.2% annualized return here, 7.6%. Again, we're showing the power of long-term compounding, slow and steady wins the race, focus on market cap and macro trends. So social interaction, social networking, all of that is still a big macro trend. What is market cap? Remember, it's the overall cost if you were to try and buy all the shares of the whole company. How much do all those shares added together cost? Well, let's take a look at, say, Facebook. Facebook is it's probably more than that now, but it's $1 trillion company. Might be less than that because I think it's down in the last few weeks, but it has revenue of $73 billion a year, and it makes $33 billion a year in profit. Those are all big numbers, and it's very profitable. But Twitter, who I typically see people use and reference often even more than Facebook in the news and other places, for some reason it's only got a market cap of $49 billion. Now, could that be 490 and almost the size of Facebook eventually? Possibly. Could it definitely be 250 and 5x where it's at? For sure. I definitely think that's the case. And if I look at the revenue, they're doing $4.4 billion a year in revenue, and they're making about $1 billion a year in profit. So this is a good company that seems to be undervalued compared to where some of its peers and others are. I don't have Snap on the list, but I want to say Snap's about a $50 company. I'll look it up real fast while we're talking, but $50 billion or so, so about the same size as what Twitter is today. And it just seems like we invest in companies based on where we think their market cap is. No, market cap of Snap is almost 87 billion. So somehow Snap is even a bigger company than Twitter. But I never see references to Snap on the news. I never see references to Snap on emails. I tend to see references to Twitter all the time. So this seems like a much more consequential company, and they just need to figure out how to turn their platform into more revenue and more profit in order to grow that market cap to a significantly higher number, which I'm sure they're working on. So anyway, hope you like the video. Hope you have a chance to buy some Twitter. Please like and subscribe, share it with a friend, and keep following the journey. Thank you much.